Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to take a look at the dollar, yields, precious metals, and commodities ETFs, at least the ones that I follow. I'm going to give you my financial opinions. And if you guys need any help with anything, check out finding-value.com. You can use the word discount in the coupon code to get a discount. We do have a 7 a.m. Mountain Standard Time on Saturday question and answer session that's coming up for all the members that are members. Love to see you there. Love to have you as a part of our community. All right, so let's dive in. Let's take a look at the DXY. The DXY getting a little bit stronger today, up 0.4%. So again, what I think might happen, and again, I don't know the future, I think this will eventually work its way lower over time. But the way that this is setting up in the short term, for sure, looks like we could head higher in the short term. I'm basing that off of the strength in the candlesticks here. So when we see these moves, they're called impulse moves. You get these impulse moves that look like this, and then you can see the red candlesticks are basically mute all through here. Now we got a little bit of more selling pressure through here, but those green large candlesticks remain intact as the red ones are smaller, which makes me think we can still head to the upside in the short term. The question is, this is more of a larger topping pattern here, Batman. That's generally in a larger decline. So I'm bullish on the short term for the DXY to maybe go up a little bit higher. But that could be bearish on the longer term, given the pattern that we've got on the longer term. So we've got conflicting bullish, bearish pieces on different time frames. The 10-year yield it's heading lower for sure, down 1.66% on the 10-year. We saw that with this large selling pressure move, and then the weak bounce. And I said this could potentially turn over. Now, we could turn over, and I don't know where it's going to go after that. We could turn over and head back down here, which means we come back to this longer-term support level. That's that long-term support level. But we may not break below that. So although the short term, we could go lower, I don't know necessarily what's going to happen in the medium term. So we could come back and we could come to this area in here. We might find support and reverse this thing to the upside. What is going to cause that to happen? Well, if we get a large shortage in the supply of oil, that could maybe perhaps have an impact on inflation and an impact on the 10-year yield. One way that we move lower is that we have problems in the banking system, and we have problems in that department, in lending, credit, banking sector. And the credit side gets destroyed, where we actually fall lower in yields, changing the dynamic of how assets are being priced. So we have these conflicting things in the short term that a lot of people don't know how it's going to play out. I'll say every single person that you're viewing on YouTube does not know the outcome of that. But what we're doing, and what the technical analysis people do, is they look for signs of other people and what they think the market's going to do. Maybe they know insider information of banks, and the banks are offloading bonds or buying bonds. And that's what we're looking for. To me, though, it still does look like this could fall lower, at least in the short term, and we want to see if it basically gets stuck at that support level. And that's about all the information that we can glean from this chart. TYX also rolling over a little bit. Is this going to continue and break this uptrend, or this kind of trend line that we've got going on here? Time will only tell over the next few weeks. The reason this is so important is that bonds and yields, we're looking at yields here. Yields price assets. As yields go lower, tech stocks like lower yields. A lot of other stocks in the stock market like lower yields, because the risk-free return on the 10-year yield is going down. I know this is the 30-year yield here. That prices assets differently. And lower yields prices stock prices higher, especially growth stocks. That also can indicate with lower yields, depending on which end of the curve it is, could also indicate that we've got problems in the market. And people are running into bonds for safety. So bond prices were higher today with those lower yields. We have not broken out of this kind of trend line here, signaling that we're going to move and move on higher. It very well could do that. We've broken this downtrend here, and we've been just chopping sideways for the past 3-4 months. Looking at the TYX TNX ratio, one thing that you should take note is that we've broken to this downtrend. Well, let's put a bigger. This is a big old downtrend here. We've broken this big downtrend line there. We've broken this downtrend line there to the upside. That should be like, hey, maybe something's changing here. We're also seeing gold take off. Gold takes off when this trend line gets broken and moves higher. We're also seeing that this could potentially do a pullback to some degree before heading higher. That could also indicate that we get an opposite move, or a move in the opposite direction. So a lot of these assets are tied to yields, and yields are pricing those assets. Right now, we're trying to figure out, because we're in a transition period, how this is transitioning and if it is transitioning. I am in the camp that you cannot deny that we have a broken downtrend line in this ratio, and that this ratio often indicates to us that gold, when this ratio goes up, that gold likes that type of environment. So we're looking at the environments, we're looking at the conditions, we're looking at things and how they operate, and what assets do well under certain conditions. How humans prefer certain assets versus other assets based off of market conditions. So that's why it's so important to understand how these yields are moving against each other. It's one thing to say, oh, the yield curve's inverted, we're going to have a recession. Okay, well, what's the next best play then? I mean, it's great that people say that, but you gain nothing from it. And that's why I got a little frustrated with YouTube and listening to it, because a lot of people had a lot of opinions on where the yield curve would go and all X, Y, Z, but they had no way of playing it, no actionable move. Well, anyway, this could continue lower, and then I think we're going to reverse higher potentially in this, which means that the 10-year yield will fall faster than the 30-year yield. That means the curve is uninverting or normalizing, which generally means precious metals do very well. And I know that wasn't the case today. Doesn't mean it will happen every day, but this does look like we could potentially head higher in the short term even. The 2-year yield, I was talking about how the opening and closing prices were looking like they were rolling over. Well, we got pounded in the head today with a lower yield. That's what we were looking for. That's what we were expecting. Now, is this going to continue to head on lower? It sure looks like it. It doesn't mean it has to. It just looks like it because that's the way that the chart looks. That's the way that the humans are interacting with each other. And normally what I've seen in history is when you get these large sell-offs and you get weak buying pressure, that generally is a continuation to the downside. So that's the 2-year yield. This is going to be fuel for gold to go higher. It doesn't mean every single day, but generally speaking, it's fuel. The CRB index heading higher today. It is breaking back above this resistance line. That is a big deal. We were coming down below. People were basically saying commodities are going to crash. They're done for. And now, we've talked about the slingshot cheetah, how there's false breakdowns. And this could be a false breakdown, and now we're starting to move higher to the upside. It looks really good to continue higher for the commodity index. This could be the end of wave 2. Maybe it isn't. No one knows for certain, but I can tell you the chart looks good to continue higher for the CRB index. The CRB to S&P 500, it looks like we're getting kind of like a bottoming type pattern. We haven't made a new low yet, which is good. And we're going to still have to wait and see, but are we going to turn and move on up here in this CRB to the commodity to stock ratio is what I'll call it. And is this the bottom of wave 2? I don't know that for sure, but we're going to watch and see if it is. If this is the bottom of wave 2 coming, we're going to see a big old wave 3. The conditions in wave 3 are going to most likely be inflationary. It's going to deal with governments printing money and a supply shortage in commodities. That is what that scenario is going to do to push this higher. Stocks are not going to like higher commodities, and they're just not going to like inflation. What that does is it's going to put producers of commodities, stocks, in a fight for commodities. They're going to be fighting for commodities in the future, which is going to be the underperformance of the S&P 500 and the outperformance of commodities. And that's the conditions that I think are coming. Gold was slightly lower today, even though the conditions for yields were there. They were basically positive, and the dollar was slightly higher, which is a headwind for gold to some degree. If we zoom in on the short term, guys, we have basically sold off a little bit, and we're coming back to that support level down here. So we just dropped down to that support level. It's not broken out. Nothing's wrong with this. This still looks fantastic for a launch to the upside. So we just had a little bit of a pullback today. Everything looks to be intact. This is a 30-minute chart, and you can see we are scribing back and forth, bouncing in this pattern. We break this thing, it's going to be a fun ride. Silver, it's kind of disbelieving gold, I think. So it continued higher today, 0.72%. This thing's still in full bull mode. That can turn around and relax. We've had a pretty big run here. But again, things can run. Things can run. Platinum up $5, still looking good. That's looking quite solid. We've had previous selling pressure where we're at. We'll see if we can break through it. XAU to gold ratio, that is still looking positive for a move higher. We're up against a lot of resistance. That's why we're compressed up against that resistance. When we break through this, guys, it's going to be a ridiculous move when this goes. So I know people say, oh, wait for the breakout. I'm going to get in when things look good, and I've already gotten in, and I'm still going to continue to buy when things, when I think things look good. So I'm not going to wait. That's just not. I can't roll like that if I know that the ratio is this low, and things are improving, and you've got higher lows, etc., etc. GDX, it is down a little bit today, and we're coming into a little bit of resistance. Gold was down a little bit as well, but we're still in the pattern for gold, and everything is still looking good. And GDX was roughly down the same as gold. So that's actually positive. We've got SILJ that was down 0.71%. That's a bloody nose. That looks good to go higher. We're also against resistance. The resistance is all through here. We've got a good chunk of resistance through here that we're going to have to work our way through. When we work our way through that, people are going to gain a little bit more confidence, especially if silver's breaking some big numbers, where this thing I think will get stuck a little bit and then rip. And we'll see what happens. Crude oil. Now, crude oil has been really strong here, and I'm gonna show you on a logarithmic chart here. Let me just blow it up a little bit more. So looking at a logarithmic chart, you can see if I grab a trend line here and here, that this is actually a retest of that trend line on a logarithmic chart, which is generally what I use on a long-term deal. You could also say that this is a flag pattern, a continuation pattern that we've broken, did a retest, and it's going to launch to the upside. I have not sold any of my shares outside of maybe one company to rebalance the portfolio a little bit, but crude could be heading higher here. Let's dive into the short term here. We came in, bottomed out. We've got the little candlesticks at the bottom. We came up, and we are moving up in a way that looks very bullish to me here. So this does look like it can continue higher. I know some people in technical analysis guys, they say, hey, this is going to turn down and go lower. That does not look like it to me. Not yet, at least. I have to see evidence for that turn. But right now, everything looks intact and it looks really good. The only concerning thing with this in the oil space is XOP is not outperforming crude oil itself. But I'm going to give a huge but here. But crude oil, sometimes when it gets to really low levels, it needs to convince the buyers in the market that this is a for sure rally. And I don't think that's got the buy-in yet. And that's why XOP has been lagging behind. Another thing that makes this, difficult not to buy down here if you're not buying is natural gas has broken its downtrend as well. This is the downtrend here. We've broken it. And it looks like we are starting to advance higher here. So if we go into like the short-term markets here, so this is that downtrend line that I drew. We've broken out, and we're basically creating a new uptrend here almost. We hit our head on it. We just have to break $2.20 to get into a new uptrend. So that's where we're at with natural gas, and it's going to get very difficult to not be wanting to get in here and buy a bunch for a lot of people. And a lot of people, you can go ahead and buy. You can do whatever you want, but we could be getting in a new uptrend here if we get a little bit more buying pressure in the markets. So XOP, it's up 1.26%. We've got bullish engulfing, bullish piercing. This is a double bottom pattern. We've broken out. This is kind of moving on higher now. It does look good from that short-term perspective. The longer-term perspective, so this is very long-term, looks very bullish. We've got an inverted shoulder that is probably developing. Is the shoulder as far down as we're going to go in XOP? And that's the question that I don't think anyone knows. So if we zoom out on this time frame, we've got a trend line coming up on XOP. We've broken to the downside. We're coming up. Are we going to do a retest and then a turn back lower? And that is a possibility. So we've got bullish and bearish signals on different time frames here. What is my guess? If I were to guess, and this is just a guess, if yields drop, gold goes higher, oil may do one last pullback before rocketing up, and the market says we just don't have enough supply out there. But that doesn't mean it will do that. This very well could come up and be a false breakout and roll. So, and this being kind of just a false market condition breakout. So I remain in my stocks. The short term is always the hardest to get right, nail right. The long term, I would say, is the easiest. The long term, I think 5 years, we're going higher. Short term, yeah, we could definitely see a move lower if there's more problems in the system. OIH also up 1.03%. Again, we've got this large selling pressure move, and the bounce isn't as big in the time frame that it took to fall. So that generally means that we will probably see a move lower before we see a move higher. Sprott Physical Uranium Trust, we were up a little bit today. And again, we've got some work ahead of us. I don't see the buyers stepping in here just rocket launching this thing to the upside yet. Doesn't mean they can't. I just don't see it yet. And that's what we're waiting. We're jammed up in the corner here. URNM, we've got good buying pressure the past week or so, but we also have this monster selling pressure that preceded it. Now, who's going to win here? I don't know. This is ridiculous, guys. We've got the short-term market movements are really going against each other. So we have to see what happens here. We could easily roll over and we could easily move higher depending on what happens here. Again, what my opinions, again, are not worth anything. No opinions are. The market's going to do what the market is going to want to do. But keep in mind, though, I know a lot of people are going to say, this is a potential, shoulder that's developed and that we are going to go lower. Problem is, lead-in patterns that we see all the time generally do like a false breakout and then rip it and get everybody on the short side here and squeeze them to the upside. That happens a lot. But it also depends on what the market conditions are happening during that time frame. Are we going into a banking crisis? Is there banking problems? Are people getting afraid and fearful? And maybe, we pull back far enough and then rocket to that extent where it's a larger, bigger move to the downside than what most people project. Either of them can happen. And I would not be confused or surprised with either of those moves. And that's why I'm unwilling to sell and lose my positions. TAN's still squeezing up. It's still squeezing up, but it did have a good update today, 2.5% to the upside. And we'll eventually, I think, work our way higher. COPX down a little bit. We're right at the upper side of this kind of pullback in this megaphone type pattern. Lithium is breaking back through its support. We'll see if it can unlatch from it. REMX is also pushed up against that support level almost. We'll see which direction it goes, either down or up. The S&P 500 rocketing up here. We saw those lower yields, and the S&P is moving on up. This looks like it wants to continue higher here. It looks really good. Same with the NASDAQ. Looks very strong to continue higher. Are we going to see an everything type rally in the short term based off of yields coming back a little bit? That does not mean that is bullish on a longer term time frame. We very well could, and I'm not saying we're going to do this, but we very well could do something like this. Boom. Come on up and then get just ravished to the downside in the near term. So we'll watch it together here on the channel, and we'll continue to monitor what's going on. But it looks good in the short term right now. EEM also just moving sideways. I still think this looks fantastic from a little bit longer term perspective. Could be an inverted shoulder, head, shoulder in a larger shoulder, head, shoulder. XHB heading higher today, liking those lower yields, breaking on up to the upside. Very strong candlestick, breaking the downtrend. Looks actually quite strong. Moo also moving higher, but again, I can't get bullish on this because we are below the trend line, and I still think it could potentially roll over with time. Copper down today, but still above support, still looking fantastic. Nice little hammer candlestick today. Lumber continuing to weaken, but we're still above the mega support line back here from the 1993. This could be 1, 2, 3, 4, 5, 6, 7, and then a launch higher, which is a Livermore accumulation cylinder that has formed. And here's your hump to move on higher. We're back to that area of support. Lower yields equals more home buying. So if we do have lower yields, perhaps that kicks something off. Maybe the commercial real estate market is going to force the Fed Reserve to push yields lower, which then launches the residential real estate market. I don't know what the narrative is, but I'm just giving a scenario which could potentially happen. I'm not calling for that scenario to potentially come. I'm just saying it is a potential scenario. Iron ore down 1.4%. And still looking good. I still think this could potentially pull back before heading higher. But this is also that same pattern as lumber. 1, 2, 3, 4, 5, 6, 7. Boom, boom. Iron ore launches. So we're seeing it across everything. This is just basically saying that inflation's probably going to come to the max. Maybe we have one last drawdown period. Maybe it'll impact oil, which I hope, so I can get even more shares. And maybe it's going to impact kind of the whole commodity sector. Nickel flat today, still looking okay. We've got aluminum down a little bit, or up a little bit, up a little bit. Up 1.23%. This still looks good to move higher. Major bull in aluminum myself. Baltic Dry Index, it's hanging in there. Surprisingly, guys, it's hanging in there. Down 0.28%. So this is definitely a bullish formation to rocket launch higher when this pullback is complete. Newcastle Coal looks like it's trying to put in some sort of bottom. We're just kind of moving sideways. I'm just waiting on it. And then Ethereum up a little bit today, 1.7%. We'll see if this thing gets unhinged. Looks like these guys who are liquidity measurements want to start rocket launch into the upside. So maybe liquidity is coming back into the market, and maybe that's why gold's about to hit the afterburners as well. So that's what I've got for today, guys. In the markets, that's what I'm seeing. And don't forget, we've got a 7 a.m. Mountain Standard Time meeting tomorrow for the Platinum members. Give me a thumb up for the content. Subscribe to the channel if you haven't. Subscribe to the website if you'd like to join the community. Love to have you with us. There's no, if you're inexperienced, no big deal. Just ask whatever questions. We have a lot of people on there. They're getting better and better with time, better charting skills, better fundamentals, better ways of understanding and identifying certain market conditions. We use a lot of ratios as well. And I've got a lot of content on all of those things. All right, guys, we'll catch you later. This is Finding Value.